Good evening. It's the 2nd of August 2023 and the market's closed after a rather large red day today, first time for a while. On my screen you can see the heat map for the S&P 500 looking rather red. Most sectors are red, you've got, apart from healthcare, which is mixed, and non-durables looks like it's green for the day. So let's take a look at the MES or the ES chart. So let's start off with the daily chart to start with, and as you can see we've finally broken down through this level here, and so we are potentially looking pretty bearish right now. So we put in this little head and shoulders pattern which I talked about in my last videos, and then we have a potential area for it to come into is this double top. So in the future, in the next 2-3 days, maybe we can see it come down to it, maybe we can see a bounce, and if we're still bearish then maybe we can see it come back down and maybe get to back onto this 50 moving average, which should merge around about here. So we're on watch for the next few days. The potential bounce at 4,500, that's probably the next area. Maybe this area here we could be watching for. What area that is, 45.20. So, but I'll discuss the areas on my pre-market videos tomorrow and Friday. So that's the daily, and we're looking bearish, and that's only because we've broken this area here. So 4,500 is something to watch out for. So let's now take a quick look at the hourly and see where we are today. Oh, one thing to note on the daily actually is the volume. So today we had, look at that, big selling volume, little tiny bit of buying volume, but it's on above average volume, which is what you expect to see on a day like this, where it's a bigger, wider candle and we're getting a larger volume bar. But if you compare that with the last sell-off we had, above average candle, we had this candle here, and it was this topping tail candle, that candle there. Okay, not quite drawn, but thereabouts. This candle here we're looking at. So as you can see, it was a big candle. It kind of engulfed all of the previous 1, 2, 3, 4, 5, 6, 7 trading days, and it was looking like it was going to be a turnaround, and this looked like a reversal candle, and that's why I was looking at this head and shoulders pattern as a potential pattern we can watch out for, which is just, as you can see, it's happened now. The other thing to note is that we had rise in volume coming into this candle, then we had this big selling candle or big down candle, which gave us this above average volume, and then we had a wide range candle there which was decreasing volume, and we had, this is an anomaly, this candle as well. We had this little tiny, almost a hammer candle, but indecision candle, but it was on reducing volume, but a really small candle. So if you compare that candle to the previous candle, you would expect the volume to be much lower, but in proportion to the candle. A larger candle, larger volume, smaller candle, smaller volume, but it was just almost the same amount of volume but on a smaller candle, showing that there's potential weakness here, maybe a battle between the buyers and the sellers. And then the next day we had less volume, but we had a selling day, and then we had the US downgrade yesterday, and overnight it just sold off, and we opened around about here this morning and we sold off for the rest of the day. So that's interesting to note. It'll be interesting to see what comes over the next few days. So go back to the hourly now. So we had, so yesterday we closed, where did we close? We closed there, and then we closed there actually, and then in the yesterday's post market we sold off a bit, and then we had the downgrade, and we gapped down in that 1 hour. We gapped down in that 1 hour. The ES market is only closed between was it 5 PM and 6 PM US time, and so we gapped down, we came back up, we retested the lows of the day, and it just sold off overnight. And so that takes me to my trade in the pre-market, which I'm going to go on the 5-minute chart, and I'm going to zoom in so we don't see the volume candles from the opening because it puts the rest of the candles out of proportion. So we sold off, and look how we touched the levels which were predetermined several days ago. These levels have been in place for some while now. Came up, came back, retested these levels again, and then we came up, retested the moving averages, and what really caught my eye was this low volume bar here. And I know it's pre-market, so you do get a lot of low volume, but we were pushing up and we had this low volume come in, and it was a hammer candle. That's what got my attention. And to me, that means, what I think that means is that the insiders or the smart money do a test. They want to push it up, and they want to see whether there's any buyers willing to push it up as well. And it was pushed up and pulled back down again, and it's on very low volume, which signifies there's no buyers left in the market at this point. And then there was this last final push to get all the remaining buyers out of the market, and then we got to the top. I was watching this increased volume, which is this area here, increased volume here, and then what really drew my attention was this big candle, above average candle, more volume than we had since that big sell-off when the US got downgraded. So I saw a top and tail. It also touched the 200 moving average on the hourly, quite significant. It also almost touched this area here, this red area, which is a supply zone area, which has been there for some time. And it was a double top from over here. And it also was an area of convergence where the tops of these candles, so this, you can actually draw the line. Let's do a line. So this area here, where we've got tops of candles meet the bottoms of candles meet the tops of candles, and it was an area of increasing volume congestion as well from this candle. I mean, this red line is a point of control, and so everything was pointing to a short. So even though it's pre-market, I don't trade the same size in the pre-market. I do half size, and so I saw it push up on volume. As it touched the 200, it came back down. I took a short entry there, came down. I was in the green straight away, and then it pulled back up, touched the 200 again, came down. I took another short entry there. So I was only down for about 2 or 3 seconds on this trade because we had this little bit of a pullback there before it pushed back down, and my break even was just about here. So it was about 45.83 my break even, 45.82.50 I think, around that area. And then as you can see, then we sold off. I held it through the open in the market, and I did add actually. So I came in, my first add was it pulled down, pulled back up, and I added just there. So I had my entry up here, I had an add just there. So my average price was around about here, I think, in overall. And then I took my first bit of profit when we come down into this level, 45.63 area. So I was out here, and then I held on through the open, and it came back down. I saw it consolidating. I don't normally look at the volume on the open because the opening candles are always high volume. So it's not until I get to about 10 o'clock is when I start looking at volume. So it's purely based on price and using the below the VWAP, below the 50, below the 200, below the 20, below the 8. Again, there was no reason to get out of this trade at all. So even though we had this push up here, it tested the 20 moving average, didn't even touch the 50 or the VWAP. So I stayed in. There was no need to, and obviously my break even was well up here anyway, so I had a long way off before it could come back and tag me as break even. And eventually I sold my last shares, and I was watching the volume here. So I saw increasing volume, which could mean ending volume, and then I got out for a good area. I think I got out, pulled down, and as it broke this candle, that area there. think that was it. No, let me backtrack slightly. I actually used this level, actually 45.53 as an out. Came down on that candle, pull back, and I got out just there. And it obviously did sell off in the end, but that's fine. I did toy the idea of taking a short here again, but I was already up nicely from this rundown, and I was okay. I'm pretty much done for the day by then. So that's 10:30. No, not even that. 10:15 a.m. 45 minutes in the market, and my day was over. But I did take a few little scalps. So again, I wanted to go long at this level, which was a significant area. If I zoom out, it was a double bottom. Going back a long way now. An area I've been watching for some time, and I really wanted to catch it as well. So this double bottom area here, and it's an area of demand as well, heavy volume. You can see this heavy concentration of volume, and so my entry would have been in that box, and probably had I not been up and I want to preserve my profit, I probably would have taken it in I've been layered into the trade. So let's go back to the present where we are, and this is this box here, and as you can see the market was weak. It sold right through, and I think I went long actually there. I went up, I was in green for a little tiny bit, and I come back out, and I got out just below break even, so it was a very small loss, insignificant loss. And then I did then go long on the break of this again, thinking we might be playing this level in, and I got out on the 20 moving average on this. That's a little scalp, so that more than made up for that little tiny loss here. So, and then I had one more trade, came back down again. I was watching this level, and there was this double bottom, slightly higher low as well, and I got in. I was watching the volume again, increasing volume, and it sold off. Where was it? It was the volume on the 2 minute I got in on, and it was the break of that candle there. So the bottom tail, high volume, which is above average volume, push up, and pull back down. I did add as well at that point for the double bottom, and I got out. I think I got out around about, took one up here, and then I didn't want to be in the trade really. I didn't know whether it's going to go up or down because it's just going sideways, and I got out as it broke this area here, these candles here. And obviously my original target was the moving average, and had I held it, I would have hit it fine. But it was more of a, not a boredom trade, it's more just wanted to get in because I saw the double bottom, and I was only in very low amounts, just one or two one contract there, one contract there. The same here, I only had 2 contracts when I got in on that one. So overall good day, green day, little tiny, very tiny loss there, so I can't really say it was 100% green day, but you know, that loss was so minor that it was almost break even. And that's it, and there we go. So today we came through this level again. It's something I want to talk about as well. Touched the level down here, came back, we've retested it, and we're now in the post market, and we're wondering we're going to go down, we're going to go one of those directions. But one thing I wanted to show you is just how significant these levels, which I put in, and I call these levels out in the pre-market in the video, and I put them in a Discord room, and these levels I've had in place for days, sometimes weeks, and they're very significant areas. So the first level was this area where we came up, pulled into this level, so was that 45.74, so that's a significant level. Then we came down, we touched this zone here, look at that perfect touch there, maybe a little tiny touch through and back out. At 45.60, 45.63, we held it there before we finally broke through, and look what happened, came back down to the next level. Again, these levels were in way, days and days and days ago. We touched it, we came through, pulled back out, so the body of the candle was still, so that's the body, held this level for a bit and then broke down. And guess what, the next level was this point of control. That's why I have that's why I have this indicator showing me. Came in, touched it, pulled back, came back in, touched it again. You could say it's not too far off of that level as well, but that comes into play shortly after. And then we came back up into this zone here, so it's playing that zone again, back down to the level here. Look at that, right in double bottom on or around that level, not far off it. If you wanted to play that level and you wanted a safe entry, you could have got in on the break of that candle. So that would have been a confirmation of that level. And then this zone for an out, right on the dot. Look at that, right to the penny almost on that level there. Came back down, touched the level again, and then we broke through it, pulled back and touched the level. Come down, look at that, look at this level. Touched the level 45.28. Couldn't get any more exact than that. And again, emphasize these levels have been here for days and days and days. So you could have played off of that, use this level as a target, and it's just sitting at that level again now. So that shows you just how significant having levels in and leaving your levels in will actually enhance your trading and give you a good perspective of where you could be heading in the next few hours if you keep your levels in place. So zooming out, yeah, the only main level is 4500. I think we had one around about 4510. I think we were looking at, but I'll put those levels in the video tomorrow. Hopefully you had a good day. Another green day for me. Getting consistent. I'm getting very few red days now, which is great. I will speak to some of you tomorrow in our Discord room. Okay, have a good evening.